Hey, good morning, everybody. This is Trendy John from Simpler Trading. We're going to start with this week's broad market analysis. But before we do that, please just take a moment, hit the like button. Any comments, any suggestions, anything you guys want to see during this broad market analysis, just let me know. This week's major U.S. economic reports and Fed speakers, there's a good list of it. Basically, I'm not going to go over this right now because we do have, this is subject to delay due to government shutdown in a not available due to government shutdown. Okay. So when we look up here, we can see that, all of these are just catalysts that push price to our buy and sell zones. Our job here in the trendy room is to identify these levels in advance so that we can align ourselves with these levels. And these are just the catalysts that push them faster. Okay. Now, starting on Monday, S&P final U.S. manufacturing PMI, we have some Fed speakers speaking. And then on Tuesday, November the 4th, we have Fed Vice Chair Michelle Bowman speaking. We have U.S. trade deficit, factory orders, job openings. Wednesday, November 5th, ADP employment, S&P final U.S. services PMI, ISM services. Thursday, November the 6th, initial jobless claims, U.S. productivity, wholesale inventories, Fed governor, and basically, let's just say Fed heads are speaking within this time. Just so you understand, these are Eastern time. Friday, November the 7th, New York Fed President John Williams speaks, Fed Vice Chair Philip Jefferson speaks, U.S. employment report, hourly wages year over year, consumer credit, and so forth. The next thing that I want to be looking at is earning whispers. I love earnings, and this is a very important part of my trading. Matter of fact, we just put on a trade on Friday to trade into Palantir. And please, I want you to come over into the trendy room and take a look under the note section. You'll see that I have our current trades in there and the charts to identify the levels that I'm looking for on Palantir. Now, this doesn't mean that I won't trade any of these other names. There are a lot of names on here. I don't want to over trade into earnings, but man, there are some beauties that are setting up. Like, for example, we have HIMS on here. And then on Tuesday, we got Uber, AMD, Spotify is one of my favorites, Pfizer. Moving on down, coming into Wednesday, Robinhood's absolutely been on fire. IONQ, McDonald's, APP, Qualcomm, ARM, Snap. Thursday, looking over here to the right hand side, it looks like we have DraftKings, Datadog. Moving on, coming over here, Airbnb. I'd be interested in how that's doing. And then on Friday, there's a couple names there. So listen, it's still earnings season. There's going to be a lot of noise. In my opinion, my overall sentiment is bullish, but it does kind of feel like things are slowing down and we could see a little bit of sideways action going into this week. And again, I'll show you that here in a few minutes. The next thing that we are going to look at is the bigger picture. We'll be looking at SPY and we'll be looking at it on a quarterly basis. Each one of these candles represent a quarter, and as I always say and want to remind you that since 2011 we have reclaimed this EMA cloud, and every time we've come into the cloud it has been a buying opportunity, and it still exists to this very day and year. One thing that we want to take note of is the divergence between price and the 9 EMA. It's looking extended, doesn't mean that it needs to come down. Matter of fact, this entire year feels like this, but on the smaller time frames, we use the same 9 EMA to get long if we pull back into whether it's on a daily or a weekly. We'll look at that here shortly. But right now, I just want you to be aware that the 9 EMA is coming into this level here, which looks awesome for support, which is between 611 and 560. And again, this is a quarterly. We may not see this until next year around March, April timeframe. But for right now, the next focus is the fact that we've hit inside our 2025 projection. So very happy about that. Let's move on. We're going to now look at the weekly chart. And this is where a lot of our focus comes in for this broad market analysis and understanding that, hey, the quarterly is great, it's awesome, but what are some of the signs that we could look for on smaller time frames to get a little bit more prepared? Now, last week started off really strong. We had 3 white soldiers, 3 continuation candles, and then we came back towards the end of the week. A lot of that sort of hinged on obviously just catalysts, some of the reports, but also just again, news catalysts and fear being driven into the market, and the fact that I'm sure a lot of technical traders feel like it's pretty extended. Okay. Now, when I look at this for this week, I'm going to keep it pretty easy for you. The over under 681 and a half basically is your over under. If we break under that, sideways to down until proven otherwise, your next level could be this gap fill right in here that I do not have annotated. But then I have the 675 all the way down into the 618 of the last 3 weeks. All I've done is take my coefficients or my Fibonacci and I have anchored to the high here. Okay. Notice that this level here, which I'm calling support of the 3 weeks and the 618, I'm giving it a little bit of grace and I'm making it wider than normal because, again, it's earnings season and I don't want to get scared out of the idea of buying the dip, but I also don't want to make it too thin just in case we don't come down into it. So all of these, the 38.2 to the 61.8 is very, very important, continuing off of these 3 weeks, okay? The next thing that I want to show you is that this level here, the over under, if I were to take this here, which is the gap, and I come up to the high, what I'm using is the 618 of the gap. So understand that this level, the over under, is important as well. So that's why I'm saying if it's under there, it is sideways to down until proven otherwise. Let's go ahead and now move into our next name, which is going to be the Qs. Same thing, I want to go into a higher time frame. So we're going to look at the quarterly. You'll notice that we came into the 2025 projection. A couple weeks ago, I was looking for 618. We hit that. And now we've moved up into our next target within the zone, which was 629. Just like the SPY, we are really extended here. But I'm going to show you something on the smaller time frame that I would say the theme of this week has a lot to do with the NASDAQ. Now, I always say that, right? The NASDAQ is kind of like the canary it's going to show you, but there's a reason why, and I'll show you on a daily a little bit later towards the end of this video when we look at our futures, why it might be that the Qs are going to lead us into not getting FOMO'd into, let's say we get a gap up tonight. I just want to be careful. There's some reasons why I think the Qs could come down further and lead the rest of the market down as well. Okay. So right here, all I've done so that everyone understands is that I've taken the quarterly candle, I'm identifying from the low into the high, and we're coming up with our Fibonacci that I teach here in the room. Notice that your bull channel is quite some distance below, but overall, what I love the most, just in case, I'm not trying to time the market. I'm not saying it's going to happen this year, but when it does, I do and really love the focus of the 9 EMA coming in at or around the golden pocket. They are aligned right now, and I just love that. So if we get the opportunity, I would be a buyer in this area, or I'd at least be scaling in at that area, okay, for the longer term. Now, let's go ahead and move into the weekly. So same thing, I'm using the same sort of Fibonacci that I just showed you, identifying the 3 weeks here. I have an over under of 624.98. If we break down below that, it's sideways to down until proven otherwise. Our support of the 3 weeks comes in at 618 by 607. On both of these, the SPY and the Qs, you'll also notice that there was a green box. We're identifying an inside and up. The box is a little bit, I guess, well, I wouldn't say that it's bigger than it needs to be. It's right where it needs to be. So we're just incorporating the 61.8 and the 38.2 here for support of the 3 weeks. And then up above, we have some extension targets if price wants to continue to move to the upside. From here, let's go ahead and take a look at the dollar. This is really important because I gave you a level the last couple weeks and told you if it gets over this to be cautious. So let's go ahead and take a look at that. All right, so when we're looking at the dollar, we identified the buy zone several weeks ago, a couple months ago. Matter of fact, I told you to look for the dollar to start making its way up. Things kind of rejected here. The market continued up a little bit, but if you've noticed, the market's getting a little bit more difficult. So the reason why, and well, I would say one of the contributors to this is because we have specifically said if price gets over 99.5 to still, or sorry, to be cautious. We started to break above that. And if we were to look at this just like, say, our favorite stock, I would be a buyer here. And now that we're getting over the 23.6, this is the bear channel. And we could stay long as 99.5 holds. Now, if the dollar continues to push up this way and continue, it could get to 101 all the way to 103. And in my opinion, that means the market goes sideways to down. So be careful. 99.5 is a big level. It's really not until I see the dollar break back below 98 or get into one of these upper Fibonacci levels that I start to feel like the market could go back up. Now, again, this is just one contributor to the overall sideways to down idea temporarily. Don't get my words twisted. I'm still very bullish, but there is room here to say we could come in a little bit and things could get a little bit difficult. But again, on the dollar, let your 99.5 be your over under, if you will, going into this week. The next thing that I want to show you is going to be the TNX. This is the 10-year treasury. You'll notice that we have two opposing zones. Let me go ahead and outline those for you. One is up here, okay? And one is then down here. And my overall thought for the entire year is that we would come down into this area. We have started to bounce a little bit. Obviously, Jerome's going to say a couple things. Things are going to do whatever they want to do. But I do believe that there's resistance above here and that we could continue down towards the 3.8 before the end of the year. Again, there's nothing for me to do here. Just take note that we did turn a little bit to the upside. The dollar turned a little bit to the upside, and therefore the market's becoming a little bit more difficult, if you will, if you're a bull. Okay. Let's go ahead and move down. The next thing we're going to look at is going to be the skew. The skew, this is an indicator developed by Chicago Board that measures, perceived tail risk in the S&P 500. And the reason why it's important to me is because I place levels on it, and then I go over those levels with you. What I'm noticing here is that we've gone from green to white. So usually what this means is euphoria is building in the market, and then we look to put on risk, right? Or sorry, risk off, I apologize. And then now we've got this sudden move down. Again, the dollar's moving up, the TNX is moving up, and all of a sudden the skew's starting to drop. When the skew is dropping and it goes from, let's say, a green to white, this just means neutral. But if it starts to really break down towards this green line and this one here, that means fear has been injected into the market. This also means that, especially in this area, that the majority of participants are lining up on the put side. Okay. Now, this is a very bullish market. So, if all is making sense, the SPY, the Qs, okay, ES futures, the Dow Jones, IWM, if they're all coming into buy zones that I identify with you, and then we have the skew down here as well, it is an opportunity for me to start to put risk on. We're sort of stuck in the middle. I wouldn't say sort of. We have been for quite some time. If we were to put a box around it, this is what it looks like. Okay. So if I were to put a box around this, then we are getting lower in on the curve. And this leads me to believe that we could see a temporary bounce up. But again, it could be a fade into an area like this. We'll know. I think we'll know by next week. Okay. So again, the overall skew is 142. We're sort of in the middle. Don't diddle in the middle. I'd rather take my trades based off of buy and sell zones and at extreme levels in the skew. The next thing that I'm going to be looking at is the fear and greed index. And what I do with this is just show it to you and allow you to understand how the fear in the market really matches with what I'm showing you when I look at the dollar, I look at the skew, I look at the TNX, things are lining up. And then when you look at the SPY and the Qs and they look extended, and I give you those over under levels, it makes sense to me. Now, it also makes sense to me that we're in a super bullish market, and as this needle ticks further to the left or stays in the fear, that it's been really easy this year to really put the bears to sleep, if you will. They come out of hibernation, they're like, oh, finally, and then boom, right in their face, market goes right back up. I don't want to change my stance on that. I'm extremely bullish, but only at levels. But just understand that the fear is still here. It did tick up from 33 to 35, so it's not as fearful. All right. The next thing that I'm going to be looking at with you all is going to be the ES futures. So let's go ahead and take a look there. The ES futures overall sentiment going into this week is extremely bullish. And I say that only based off of my banners. Now, these can change, but the yearly, the monthly, and the weekly are extremely bullish. But I am taking note and having just a tad bit of caution here coming into this week. A few things. Notice that the candle looks a lot like the SPY. We were 3 weeks up. Things look good. We came in a little bit. And our weekly 9 EMA is actually very confluent with our inside and out formation. Now, this 9 EMA on the weekly has proven to be stay long when we're above it, or be cautious when we're extended and get long again when we come into it. It's been quite some time since we have been below it. Matter of fact, that time was right here. We could say that 428 was the last time that we were underneath. And then when we came up, so 428. And then we came up, we stayed in there, and then we just rallied since then. Okay. Just like the SPY, I pretty much have an over under. Be careful under 68.62. Sideways to down would be my idea until we reclaim 68.62. Just use it as your over under. Your fib extensions for the upside this week are 69.80 to 70.76. And then to the downside, 6,800 by 618 of the last 3 weeks. Again, using these last 3 weeks as an anchor for my Fibonacci. This is where I get the 618 from, and it is aligned with the inside and up formation. This is where I'd be looking at a nice buy. And let me be very intentional with my words. This is my favorite area to be looking for a bounce buy this week. Now, what does that mean as far as SPY, just in case you're not a futures trader? We take 67.12 and you minus it from here, and every 10 points equals $1 in the SPY. Moving on, let's go from the top down approach. This is your daily. Now, this is where it gets interesting in my opinion. I always tell you that cycles are very, very important in the trendy methodology, but also in really everyone's methodology. If you've never taken note, in most cases, the market moves 2 to 3. And what I mean by that is that the days move in 2 to 3. So 2 to 3 days down, and then you're looking for a pause and then a possible bounce. So the ES Futures is telling me that we could see a possible bounce on the open tonight. Now, I don't know about any news catalysts or anything that's happened over the week because my focus is always price. Price is key. Look for a pause, all right, to possible down if we had moved 2 to 3 days up. So here, again, possible pause, and then we get a bounce to the upside. Notice that I have a resistance level basically around the round number of 6,900, which is only about a quarter away from now. Notice also that Friday we did bounce off the 9 EMA, and this was improved to be a really nice area to get long the day before as well. But this is, again, the 9 EMA that's been tested a couple times. If we break under there, be careful. The next area on the trigger longs from a daily perspective, I'm looking at this area here that could prove to be a nice little bounce area as well. Let's go ahead and move into the 4 hour. The reason why I want to show you the 4 hour is just to primarily tell you where the edges are going into this week. Your upper edge is around 69.42. We could just round that up. And your lower edge is around 68.56, 68.55. The idea here is the closer we are to the lower edge, we're looking for a bounce. And the closer we are to the high side here, we're looking for it to sell off. It does look like a tighter range this week compared to the last couple weeks. And that makes me think that this week could be a little bit more difficult, just meaning that it could be more about selling credit. But again, I'll let price dictate that. This is just what I'm noticing from my analysis for today. Down to the downside, we have a little bit of a gap fill that could happen. Then we have support at 67.92. And again, this area here around 67.36 by 66.89. I really like the move out of here. And if we were to see this, I would definitely be trying to buy lower. Friday, we closed towards the lower edge, again, giving me the idea that we could see a small gap up tonight on the futures. Let's go ahead and look at the NASDAQ futures. So NASDAQ futures, again, we'll go to the week. Notice here, same thing. Looks a lot like the Qs. Your over under is 25,941. Below that, we could see prices go sideways to down, looking for 25,628 by 25,144. These are areas of support, but you'll notice that on both ES, NASDAQ, SPY, Qs, that it's closer to the inside and up, or in this case, not an inside and up, but in this area is where I'd be looking for the bigger buyers. Okay. Now that's a pretty significant pullback, but again, if it were to happen, it wouldn't be shocking to me. It would just be a reset, kind of, knock out some weak hands, and then we just kind of continue back up into the holidays. Okay. All right. Moving down, let's get to the daily. Now, this is the part that I said was interesting. So the NASDAQ lights the lead, and we don't have 3 days down. We had 1, 2 days down, and notice that the 9 EMA did not get tested. Be careful. If we do bounce up, we'll be talking about it intraday if we are bouncing up into resistance. And if we are, I would expect it to probably be a nice little drop down into the 9 EMA. That would give us, from here, it's quite some distance. Now, understand the 9 EMA moves, but at the moment, the 9 EMA is around 25,800. Okay. So this is the part that really is sticking out to me. My trigger long, and it doesn't mean that I won't get long before this, guys, but on this daily chart is at 25,415. Let's go ahead and move on to the 4-hour. Just like the ES futures, I just want to identify our upper edges. And again, the reason why, the closer we are to this curve, looking for a little relief bounce, the closer we are to the high end of the curve, I'm looking for a rejection. This number comes in around 26,318. This level down here comes in at around 25,778. We do have a gap fill down here below at our previous edge. So understand if we break down below there with some nice trajectory, or I should say speed, look for it to come down into this area. Now let's go ahead and finish this off with Bitcoin. So Bitcoin futures, very important for me. I am a holder, a long-term holder in it, and I just want to go over what I'm seeing. So last week we talked about it or I was saying that it could gap up, but we were gapping up into what we call the bearish golden profit level. All we did was use the 50 and 618. It bounced into this area, and sure enough, we got exactly that. This should not have been a surprise if you watched this video last week. And I would say going into this week, your main focus, if price gets above this level, that's great. But this is the focus for me. The 200 SMA, you find this on the daily. It is the blue dotted line on my chart. If we break down below that, be careful. Price discovery probably puts us towards the 100 to 95,000 level. Above 118,000, things look amazing. But it's not until we get above, let's see here, I wrote it down. All right, weekly, inside week, and future show, we could be opening. Yep. All right. Okay, let's go to the quarterly so I can show you this really quick. All right, so I've changed the neutral. Please understand where I've placed the levels. All I'm doing is aligning with the body of last quarter. So 115,000 and a half by 107,000 and some change. This is neutral. So I would just leave it alone, right? If you're not day trading, it's an inside quarter at the moment. Just like everything else, there is a lot of diversion, right, between here. If it was a quick move down, I want to be a buyer. If it's a slow trickle down, it makes me wonder if we're actually going to get to my 2025 projection for Bitcoin. Now, if price is over 124,500 at any point, I believe we go to all-time highs, and I believe that percentage is 95% probability. If we come down into the 9 EMA on this chart, again, I'll be looking to add. into this. Okay. So overall, that's what Bitcoin's looking like right now. If I come over to Robinhood and take a look at what's going on at the moment, I just quickly looked, say, hey, is it green? Is it red? What's going on? And right now it's showing that it's red and down about 580 points or so. Okay. So again, that still keeps us within, this area here. All right. Overall, again, let me just make sure that I reiterate this. I'm bullish on pullbacks, but only into levels. I'm cautious if we were to gap up tonight because I believe that the NASDAQ could lead us down further. And I'm only basing that off of technicals, looking at the 2 days down versus 3 days down. Now, remember, it could be that the SPY and the ES leads us to the upside. They had 3 days down, they came into the 9 EMA, but I do have my eyes on this NASDAQ chart, and of course, we'll be looking at that in the morning. As a reminder, all, we started our challenge on last Thursday. I only have 2 trades on that have taken since then. Melissa's taken 1. She's also done a video for you guys for Saturday to take a look at for her possible swing trades or day trades. Please take a look at that. As far as my information, I've also put my charts in there, why I took the trades, and what I'm looking for. If you have any questions, please let me know. And just know that it's not too late to join the challenge. If you're interested, please go to simplertrading.com, click on the traders, look for me, and you will then find a link there to get into the challenge itself. Okay? Have an amazing weekend, guys. I can't wait to trade with you. See you soon.